Good morning, this is Ian and this is your weekly market wrap-up video. Been quite a volatile week in the markets. On Wednesday we saw quite an aggressive sell-off in the US30, which is the Dow Jones, and then a period of consolidation yesterday. This is going to be the first product that we're going to be looking at in today's video. Also the DXY, which is the US dollar index, seen quite an aggressive move to the downside. We look at big picture analysis. So in last week's video we were concentrating on DXY, trying to work out where we were in a medium term outlook with a concentration on the weekly chart. We're going to break down the DXY again this week to highlight what could possibly be happening in that index, and also obviously the correlated products, euro dollar, dollar yen, dollar Swiss, etc. I also want to talk briefly about a trade I've executed this morning. I look at 50 odd different products, so I'm always looking for the best technical setup that I've seen in the Australian dollar against the Canadian dollar this morning. I also will finish off looking at gold. If we get a break to the downside today, in line with a break to the upside in DXY, then it's going to trigger some short-term sentiment, I believe, for that commodity. So let's get to the charts. Just to quickly explain what we have here. This is a trading view setup. So middle bottom is a monthly chart, US30 this is. Then we go left, weekly, daily, 8 hour, 4 hour, and then down into the hourly chart. And basically what we're looking to do, or what I'm looking to do, is to basically get a bias off higher time frames, and then looking for chart formations in shorter time frames, and then going down all the way basically down into a 1 hour chart to try and get a trigger. What I also use for my own setups is timing. So I use DMARC indicators. They basically give me an element of timing for my trades, which I believe a lot of people do not combine with their technical setups. So I find it very important. It gives me quite decent entry levels. It also highlights my stop and targets, which is, as far as I'm concerned, the most important part of trading. So US30, what can we see? Well, the weekly chart, bottom left hand corner, we can see that virtually, well, we have seen all the initial weekly gains being overturned. If we go to the daily chart, a doji style candle on Tuesday, then this aggressive sell-off. Remember, we want to be trading with the trend, so we want to be trading with these impulsive moves and not the corrective moves to the upside. What have we seen today? Well, we've seen yesterday we've seen a period of consolidation. Okay, so the dip was bought and the rally was sold, and we've been left with an indecisive doji style candle. It's important to read the higher time frames to really get a grip on these shorter time frames. So impulsive move, that's the sort of side that we want to be trading on. Then a period of consolidation, indecision. So we really need to be looking at where we believe it will go into shorter time frames. So I'm going to go down to the 1 hour chart. Okay, although we've made new highs, as we wound up, the trends were getting smaller basically, and that formed an ending wedge pattern. Now these formations have a bias to break to the downside. We saw a little bounce higher, that was wave 2 in a bearish Elliott wave count, and then we saw an impulsive move lower. Now the measured move target, and that's why I like to trade wedge formations. I also like to trade head and shoulders patterns because they give you a defined target. So the measured move target for the wedge formation is the start of the wedge. So that was at 41,763, quickly achieved, and then we actually broke a little bit further to the downside. Now I've got some support levels close to 41,600, and we saw that bounce higher. And then basically this is yesterday's doji style candle. So if you read this morning's report, basically expecting a period of consolidation while we hold within this range, but probably breaking out in this afternoon's trade. So what do I see as a big picture analysis? Well, I see an impulsive move to the downside, which tells me that the move higher is most likely going to be corrective. I want to sell into corrective rallies. So what I believe we're forming here is a head, a left shoulder close to 42,482. That was the last swing high. I see 5 waves to the downside, which should dictate that the next move higher is in 3 waves. So 1, 2, 3. I need to see a decent reversal formation. And when I say a decent reversal formation, what I'm looking for is a cipher pattern. So let's just get my tools up. So this being the dominating leg, XA, and this correction higher being AB. We're currently in the BC leg, and then moving up higher to form this right shoulder. So it will give us confluence. So we're basically looking at reading the charts so that we can understand where the dominating pressure is coming from. This is the dominating pressure, okay? This is corrective pressure. This is a corrective formation. That's the left shoulder, potential head and shoulders pattern. So just to quickly talk to go over what we've talked about with regards to the US30, which is the Dow Jones, I believe we're making a topping pattern. There's ample scope for a correction to the upside today. I would look for that correction to be sold into close to 43,000, 42,500. Now, in addition to that, what used to happen, and we haven't really seen it this week, but risk on, risk off. Normally when we see risk off, so US indices, stock indices move to the downside, we will normally see a run to safe haven. So safe haven is normally the US dollar, the Swiss franc, and the Japanese franc. That's gone out of skew to a certain extent with regards to the US dollar, but I think that's going to come back in. So I think what's going to happen is we're going to see a correction to the upside in US indices. That's going to sell off, and we're actually going to see a move to the upside in DXY. So let's get to DXY, which is the dollar index. Again, let's get to the sort of big picture analysis first. So as we said, or as I said previously, we're in a corrective pattern as far as I'm concerned with regards to a medium term outlook. So this is wave 1, wave 2, wave 3, wave 4, wave 5. That dictates that we're now in an ABC correction to the upside. Now, you might be sort of looking at this week's candle and think, well, that's a really strong, aggressive candle. Surely I should be trading with the trend. Possibly, but not from current levels. Okay, so basically what I think we're going to do here, and it's going to be messy because like I said, it is a corrective pattern. So I think what we're going to do here is something like this, and then move lower again. All these waves are made up of either 3 or 5 waves, and they overlap. So normally where you want to be trading, like I've just said, is on the impulsive side. So you don't want overlapping waves. You want an impulsive, direct move lower. What we get in these corrective formations, and that's why we have to break down into shorter time frames, is a lot of overlapping wave patterns, and those overlapping wave patterns are quite hard to trade. And that's why I like to see timing, and I also like to see confirmation of the wave formations. So basically what I'm looking for, I'm talking about Elliott wave, I'm trying to catch this. Okay, so I've got my first wave in place, I'm trying to catch this breakout. So I used to say I tried to catch wave 2. I do try and catch wave 2, but it's normally a confirmation that I'm in wave 3. Okay, so in other words, wave 2 has completed, and I'm now going to move lower in or higher in wave 3. So let's get to this chart. So this is the intraday chart. This is going to be the 1 hour chart. I'm actually going to dive down into 15-minute charts when we get to shorter time frames. So there's potential here, and you see this dotted line, or this slight dotted line on the chart. It gives me timing, so it's a timing element. I need to see a break of this level, and that's at 99.50 before 5 p.m. UK time, which is 4 p.m. GMT. I believe that we are currently trading within the BC leg of this crab pattern, but I could be wrong. Okay, to take a trade here gives me much better risk reward. Okay, so I've got an outlook. I can take a trade here, and it can give me around about 8R. Relatively small stop loss. If I break below 98.86, then this pattern is negated, and this formation's gone. And if the formation's gone, the bias has gone, and then it flips everything else on its head, basically. But because this is a corrective pattern, going back to sort of big picture analysis, because this is a corrective pattern, I want confirmation. I don't mind taking smaller trades with smaller R rates while I believe I'm in a corrective sequence. So if I move up to here, it won't be 1.6R, it'll be something like this. So I'll get close enough to 3R. So if I'm risking £500 on the trade, then I'm expecting to make 1,500. So basically 3-to-1 risk reward. So this is giving me a mild bullish bias, easy for me to say, in DXY, and I think that's going to correlate with US30. So obviously not many of us trade DXY. You can trade it on some platforms, very wide spreads, so it's a sort of pointless project. So let's go to, I've got watch lists on this on the right hand side. So I've got for every single currency, be it the dollar, the Swiss franc, the Japanese yen, I break down into small groups. So let's see what I believe is happening in the US dollar. So opposite, if we look to the weekly chart, just pull this one in, opposite to DXY, so 1, 2, 3, 4, 5. So we're now in this choppy correction to the downside. I just want to talk about this chart to start with. So this is the 4-hour chart. I'm just going to change time frames because I want to be able to explain what I'm seeing inside these patterns. So corrective formations, they're made up of 5 waves and 3 waves. They can overlap. The first wave can be 3 waves, the first wave can be 5 waves, the second wave is normally 3 waves, the third wave is normally 5 waves or 3 waves. You see how complex and how easy it is to sort of pick a wave pattern. So it's difficult to analyse. That's what I'm trying to get. So what I can see here is the first wave being in 5 waves. So this wave up here. What I then see is a 3-wave correction. So already it's sort of saying to me this is looking like a corrective pattern. And then the next move higher in 3 waves. So we've got 5, 3, and 3. Okay. What do I see? Well, what I see, if I put an extension tool on here, remember I'm taking this bias from DXY, so I see a correction or a possible impulse move to the downside. Now, with regards to cipher patterns, this can then be what negates this view. Well, what blows this view out of the water is if we move through 113.63, which is yesterday's swing high. So again, getting very tight on there because DXY is tight on the bottom. What we haven't got today is any large US figures, so we're going to need probably a news catalyst to produce this downward move. And remember, I'm really going to be trading DXY. I'm not really going to be trading euro dollar, so I need that move through by 4 p.m. GMT. So when if I get that break to the upside in DXY, I'm going to wait for it to complete, and then I'll take my short trade in euro dollar. And again, it's probably going to have to break this swing low, so I'm going to have to work out where my risk reward factor is. My target level, I know that's going to be at 110.84 to complete this corrective back pattern. Sterling dollar. There's just quickly going back to here. So we're going to go down into a shorter time frame. So just a 15-minute chart. What I also like to see is inside patterns. So this is just a 15-minute chart. This is a back formation, so similar to what we've seen in the opposite direction for a higher time frame. So again, mixed, pretty volatile trading to the downside. 1, 2, 3, 4, 5, completing an Elliott wave pattern and completing a back formation. Again, if the swing high gets taken out, then this pattern also gets taken out. Sterling against the US dollar. Let's just take this back. What can I see? Well, we had a flag formation, measured move target, which is at 134.74. That's been achieved. We've got a 161.8% extension level located at 134.94. Why is that important? Well, that's important because if we go to this, and again, fib tools are so good at forming patterns. Okay, and these patterns repeat themselves over time. So I believe what we might be forming, again, is this. Okay, so another cipher pattern. This is known as a butterfly formation. We haven't got confirmation as yet. What I want to see is a lower high, and then I can formulate where my target level is going to be, again using fib extension tools and retracement tools. What I do see on the 1 hour chart is this ending wedge pattern. Okay, so that combined with the cipher formation highlights that we're probably getting in towards the top. Again, let's break down into 15 minutes. If we're intraday trading especially, this last move to the upside could complete an inside bearish bullish Elliott wave count. So just to put that on, 1, 2, 3, 4, 5. So a little bit more upside pressure and then a chance to move to the downside. Why is this important? Because I know the measured move target, so I've got a target of 132.50. It's a wedge formation. I need to see a breakout. What I like to see is something along these lines. So sometimes it's short. So basically, wave 1. Coming lower like that. Again, my preferred stance, this is quite interesting. This previous swing high at 134.70 could end up being sort of top of the second wave. I need to look at price action in here to see whether or not this is impulsive, this is corrective, and this is impulsive to then get me short in that product. Dollar Swiss, quite a product that I quite enjoy trading. Got an amber light on it at the moment, so it's sort of on my watch list. Again, I need to see an impulsive move to the upside. What do I see here? Slightly different pattern, but with the same sort of conclusion, if you like. This is an expanding wedge pattern. So harder to trade if you're trading it on an intraday basis, because it's getting wider and wider as opposed to an ending wedge getting smaller and smaller. So these waves do have a tendency to get bigger. But what we have, and again, I'm probably going to be trading euro dollar, not dollar Swiss. What do we have? What have we got the potential to have? Okay, another inside back pattern. So we're getting this correlation. So all this correlation is building the correlation with US30, the correlation with DXY, the correlation with euro dollar, the correlation with sterling dollar, correlation with dollar Swiss, etc. One I do like, and again, posted a report on this morning, and I like this because it has got a timing element to it as well. Dollar yen, large descending channel formation. At the moment, we're still making lower lows and lower highs. So what defines the trend? Exactly that. So lower lows and lower highs. I want to see higher highs and higher lows. Got 261.8% extension level up here at 146.80. If I get the trigger, I believe it'll only be corrective, because again, using correlation, US30 is really, if it moves to the upside, it's only going to be it's only going to be a correction higher. I wanted to see a swing low or lower swing low this morning, close to 143.14. I've got that. What I now need to see is an impulsive move to the upside. I think it's actually free UK. So I need to see a break of this level. Got an alarm set on there, 144.10. I need to see a break of that level to confirm that I'm in the third wave, and then I can set my trade. Okay, so then I'd be looking at taking longs around about there. It's going to give me again close to 3R. Not fantastic, but definitely good enough to execute a trade. Aussie against the US dollar. Right, what do we have here? The daily chart. Let's make it bigger. Just got a really prolonged period of consolidation. I think potentially, if I sort of squint hard enough, I can virtually see a bearish head and shoulders pattern. But do I want to be trading that? No. If I put the RSI on there, which is the relative strength index, all you're going to see is it trending along the 50 line. And that basically means that we're not trending. Okay, we're just moving sideways. This, I think, is going to wrong foot a few traders. We're seeing a large symmetrical triangle pattern. Okay, they have a bias to break to the upside. You've got to remember that the Australian dollar is also sort of correlated to risk on. So being a high interest rate product or asset or currency, when stock indices move to the upside, the Aussie dollar has a tendency to move to the upside. What I think we're going to do here is break out of this triangle formation. Swing traders might look at that as a long-term buying opportunity. I think all that's going to happen is that we could potentially move up to here, which is 65.18, take out stops above the previous high, which are at 65.15, and then just move lower. So not a product that I recommend trading at the moment. New Zealand dollar, exactly the same, slightly different pattern, but just a large symmetrical triangle pattern. Has the potential to break, or has the bias to break to the upside. I think that breakout is going to be false, and then we'll move lower. Okay, dollar CAD, bit of a mixed view here. Wyckoff, I don't know if anybody, or Wyckoff theory, I don't know if anybody studied that. Just going to have a quick drink of coffee. But it basically highlights in different time frames as well that we get these big periods of consolidation. So this is when smart money, banks, hedge funds, etc., are accumulating long positions. And what happens is we break to the downside, taking out quite a lot of stop losses on its way, and all that happens is that smart money sweeps up the stop losses and then pushes this product back to the upside. So again, swing traders or maybe sort of novice individuals will see this as a large flag pattern. They'll then expect a really extended break, because this is the flagpole. They'll expect an extended break to the downside, and what happens is they just get a short breakout. I don't even like this as a negative outlook, and that's because with regards to sort of other Canadian products, I'm not sure how much further this is going to go. From an Elliott wave perspective, this could be a fifth wave because it's broken the bottom of wave 3. So again, if I'm going to trade it, I really want to be looking at buying opportunities down around here, but around about 137.18, than to be shorting it here. There's no sort of decent risk reward setup, as I can see. Plus, if I go into sort of tiny time frames, which I consider to be sort of 15 minutes, this would be corrective 4. Okay, breaks out of the wedge, makes the wedge target, but we can see a wave here in 5 waves. So unless this is going to be sort of inside wave patterns, I don't really want to be selling into this. Gold. Let's finish on gold before AUDCAD. So again, a timing element. I was expecting it to line up with DXY. It needs to break lower before 3 p.m. UK to produce my signal. I've got a bearish, but again, just highlighting or going over the way that I trade. I look for patterns, I look for formations, but then there has to be a timing element involved in the trade, because then that tells me exactly when to get in, when to get out, where to place my stop. So here, ending wedge pattern, got a measured move target down here, got a 261.8% and the bat formation completing at 3,170. That would suggest we are currently within this second wave. Now, as I previously said, I don't really trade the second wave, I trade this third wave. So I need to see an impulsive move to the downside. It needs to get below today's open, which is at 3,294. Got a swing low here at 3,279. It needs to get through there before this time scale, okay, to confirm that we're in an impulsive move to the downside. Last product, and I'm hoping this is still holding since I've been prepping the video for about an hour. This to me is quite a basic setup. So wedge formations are very productive. Okay, we're looking for things that happen more often than they don't. Wedge patterns will normally reach their target. I think it's about 68%. You could probably ask AI and it'll probably tell you. So you've got the target here, which is at 0.9011. What do I like to see? I like to see big impulsive candles. So if we go down to a 15-minute chart, and I can see the price action from this morning. Okay, so wave 1, wave 2, an impulsive move to the upside. I think we're just going to consolidate now in 3 and 4. Minimum target for me is going to be up here at 89.45. What I'm really aiming for, and again it will be on a timing perspective, is 89.70. Could potentially get a bleed all the way up here to 90.11. So just to highlight what I've talked about in today's weekly wrap up, the US stock indices look like they're going to correct to the upside, but wary of that head and shoulders formation. Again, when we see the move lower, it needs to be impulsive, it needs to be aggressive, it needs to break out of previous swing lows to take out stops, etc., and confirm that that head and shoulders is in place. On a more shorter term time scale, I'm looking at DXY. I want to see a move to the upside in DXY. I then want that to trigger my correlated products, if you like. So sterling dollar to the downside, dollar yen to the upside, dollar Swiss to the upside, and euro dollar to the downside. New Zealand dollar, Aussie dollar, because we're going to get that. We're going to get two currencies moving in one direction, and that's why you get that period of consolidation. So both the single currency Aussie dollar and DXY, which is the US dollar, I expect to move to the upside, and because they're both moving in one direction, the cross has a tendency to go nowhere. Okay, I hope that has been informative, educational. My aim is to educate you on our journey, and I wish you all the best in your trading week ahead. Many thanks.
Ola Prime, trade with transparency.